helpful one, especially when you're at a point of getting ready to start the business loan application. So I will start sharing my screen here and pull up my slideshow. Let's see. Alrighty, can you see
Looks
the
perfect.
presentation? Perfect, perfect. So with the sharing of screen, I'll say that if you have any questions throughout, we should have time at the end for questions. But if there's something that catches your eye and you want to ask it so you don't forget, just throw something in the chat, and I'll try to keep an eye out for it. But like I said, we should have some time here at the end
Business
of
bank
the
loan.
have time at the end of the presentation to go over some questions that folks may have. So what we're going to kind of go over today is I'll first kind of give you folks a overall background on myself, give you guys some context into the experience I have in the business lending side of things. We'll go over what's needed in an application, the understanding of your business, the understanding your ask, tips to strengthen your ask, and then the resources. And then at the end, we'll go over some questions. So a little bit about myself, born and raised right here in Bangor. I went to Bangor High School, went to Husson, and now work at Bangor Savings Bank. So I've really spread my wings a little bit. I haven't made it too far from Bangor. So while I was attending Husson, I began working at Bangor Savings Bank as a teller. And then upon graduation, I joined the bank's management trainee program, which is a holistic kind of training, 18 to 24-month training program where it's like a crash course on banking, which led me to first having a role at our State Street branch, doing a lot of consumer lending, to now on our business banking team, where I am a vice president relationship manager, which covers small business lending. So basically anything under $500,000 is our general rule of thumb. There's some movement that I can go a little bit up on a case-by-case basis, but then anything over that goes up to our larger commercial team. So with Maine having a lot of small businesses, this is a pretty important department to the bank, as there's a lot of businesses that fit into our world. So it gives me a lot of good opportunities to talk to a lot of different businesses across the state. So I cover kind of Bangor north and east, over to Calais, Eastport, Machias, Ellsworth, Bar Harbor, Bucksport, and then Greater Bangor. And then I have other team members that cover the other parts of the state. So if you're in one of those territories and have any questions or need anything for your business, I'd be happy to help. Or if you're in a different area, I can certainly connect you with someone else. Prior to banking, I helped out at the bakery that my father used to own with my uncle. It was Brick Oven Bangor Rye in Bangor, a long time Bangor-based business. So learned a lot of small business stuff from a very early age. Kind of by the end of it, I was doing a lot of the behind the scenes stuff, helping my father out with that. So I learned a lot about small business in that sense too, and what it truly means to run a small business. And like I said, born and raised in Bangor, but currently live in Herman with my wife and 4-year-old twins. So I have a lot of free time. That's a joke. I don't have any free time. So we'll start in here. Like I said, I always like to put the Brick Oven Bakery. That picture there that was the bakery that my father owned for about 12 to 13 years, I think is how long they owned it for. But it was my first real exposure to small business. So when it comes to understanding your business, it obviously is very important to understanding your ask and the financing that you need. So lenders really care about how long your business has been in operation, because it helps us measure the stability and the risk associated with it. At Bangor Savings Bank, we consider a startup business any business that is 2 years or less than 2 years old, essentially. So now that that is also dependent on an ownership structure. So if you were someone that had purchased a long-time existing business, we would still consider it a startup because of the ownership change. And then so expect closer scrutiny, more emphasis on cash flow projections, personal credit, and experience in the industry to really come into play when you're talking about a startup request. And then established businesses are anything older than that, so 2+ years. Put a lot of focus on the operating history, as that can obviously work in your favor when it comes to a loan request. And then it demonstrates survival through some challenges, seasonality, market shifts. That builds credibility when it comes to the lending. So it's very important to be transparent when you're talking about your business age and ready to explain how you've adapted and grown during the time, or how you were planning to grow as your business continues to expand. So past, present, and future of the business. So past being what problems does your business solve? What has it solved in the past? What milestones have you achieved? Revenue growth, customer base expansion, that kind of stuff. Present is what does your business look like today? If someone asked you how business is going, what would you be telling them? And then discuss current operations, staffing, your position in the market, that kind of stuff. And then in the future, be prepared to clearly explain why you would need this loan, how it's going to fit into the growth plan of your business. As lenders want to know, how is the financing that you're coming to us for? How is that going to help your business continue to grow and continue to be successful, let's say. So a clear story connecting past experiences with the future goals that you have in mind really helps building kind of the confidence that a lender or a credit team would have. Another thing that's important to know is the value of your business, and these kind of subcategories, the financials, inventory, equipment, useful life. I'll kind of go into those a little bit right now, and how that plays into the how we determine a value of the business. So the big one is financials. This is probably the most critical area on the application. So be prepared to provide projections, profit and loss statements, for previous tax returns, both business and personal, when it comes time to financials needed for a loan request. As lenders, we're looking for consistent revenue, expenses that are manageable, strong, healthy margins, and an ability to repay debt. So knowing your numbers, understanding your financials is very, very important. And if you can tell, in my experience, you can tell pretty early on when the business doesn't really know their financials that well, and that just comes with some inherent risk if the owner isn't really well in tuned to their financials. Inventory. So inventory is another way that you can go towards the value of your business. So inventory is a pretty key asset, especially in like the retail, wholesale, or manufacturing world. So I'd say it's important to be ready to explain the types of inventory you carry, how often it turns over, how it supports your revenue generation, as excess or slow moving inventory can be a little concerning. So it's important to kind of always have that inventory kind of nailed down depending on your world. Now, showing that inventory is well managed and aligned with the demand of the product, and that it's not just sitting on the shelves, is a good sign, as it shows that you're understanding the operation of your business. Equipment is another thing that plays pretty well when it comes to the value of your business. Oftentimes it can be used as collateral for loan requests. So if you're, depending on your industry, some industries are more apt to have equipment than others. Like if you're a consulting business, you're probably not going to have a lot of equipment. However, if you're a lawn care business or a construction company, you're going to have a lot more tangible, heavy equipment that could be used for collateral. So being prepared to discuss the type of equipment you own, how it is used in your daily operations, and whether does that equipment help generate revenue, or does it support revenue? So is it a piece of equipment that is used to generate the actual sales that are coming in, or is it something that is used on the back end that supports the operation, that kind of thing? Useful life. So this goes hand in hand with equipment. Lenders are always going to look at how long assets will remain functional compared to the loan term. So we're not going to, if you come to Bangor Savings Bank and are looking to buy a 10-year-old dump truck, we're probably going to want to put that on a little bit of a shorter amortization, meaning a shorter loan term, probably 3 to 5 years. Where if you're buying a brand new dump truck, we may be more willing to do a 7, maybe even a 10-year note, depending on the specifics of the situation. So age, condition of the equipment, maintenance practices, expected remaining lifespan, that's all important to kind of speak on. Now, it doesn't always just come down to the age of a vehicle. If you're a big trucking company running a big tractor trailer truck, those it's not completely out of the ordinary for trucks to have a million miles on it, but the engines have been rebuilt 2-3 times at that point, that kind of thing. So be ready to explain the life expectancy or the life plan of the useful life related to that equipment. And from your perspective too, the financing term should always want to match the useful life of the equipment. If the equipment stops working, but you still have 2 years left on the loan, then that's going to really put you in a little bit of a bind. Short-term equipment needs kind of short-term financing, longer-term assets supporting the longer terms, that kind of stuff. And the last thing on the slide is just knowing your short-term and long-term goals and why this is important. It helps know exactly why you're borrowing. Short-term goals it can also help figure out what kind of product we're looking for right now. Short-term, you're looking for to cover short-term cash flow constraints, so maybe a line of credit to help cover seasonality, cash flow delays, that kind of stuff. Inventory purchases, using a line of credit to buy inventory, well, then you get paid for that inventory and you put it back on the line, not carrying debt long term. That's kind of what lines of credit are used for. So you can think of lines of credit also have typically a higher interest rate than a term loan, with the idea that they're not intended to really carry a balance on. So if it's something that if it's a longer term need, like an equipment purchase or a real estate purchase or expansion, stuff like that, startup funds to buy inventory as stuff is and get your business off the ground, maybe a longer term financing note makes sense there because it's not directly related to a project and not going to be able to be paid down very quickly. A term loan, better interest rate, better structured payment plans on it, that kind of stuff is what I would recommend there. And also knowing your plan coming into the conversation is important too, as clear goals shows discipline and planning and not necessarily desperation. I always tell, whether it's a new customer, an existing customer, to always, I'd much rather you come to me if you're in a bind when you first recognize it than when you're 2 weeks behind on your loan payment and we need to make a plan there. So being upfront, planning, and being open and communicative with everyone involved was going to take you a long way. So a strong loan application tells a complete story. It shows who you are, where the business has been, where it's going, how this loan is going to help get you there. So participation builds confidence both in you and the lender. So the more you're prepared for the loan, and the more you know and can talk about your business, I can know pretty early on if this customer knows their business or not. So preparation builds confidence both in you and both as a lender. Okay, so applying for financing. So I know we just kind of went over the specifics about understanding your business and all that kind of stuff. So when it comes to what is needed and how are we going to look at it from a underwriting standpoint, what does that look like? So number one, what are loan funds used for? Lenders are going to want a clear, specific purpose for every dollar borrowed. Whether it's you're getting $100,000 to buy a brand new piece of equipment, or you're looking for $100,000 for a number of different things. We're going to want to be able to document and track each use of those funds. So common acceptable uses include like working capital, equipment purchases, buying real estate, that kind of stuff. Number two, how will the loan be repaid? So this is known as the primary source of repayment for the loan. Most businesses, this comes from ongoing cash flow or revenue generated by the loan funded activity, meaning the revenue that is coming from the business. Lenders will want to see that it's reliable, that cash flow is sufficient, and it's realistic repayment structure that fits the business cycle. So I say that if you're a business that has pretty seasonally has a decent amount of seasonality to it, let's say, then maybe we could structure the loan with seasonal payments, meaning that 4 months out of the year is your slow period. You don't have a lot of revenue coming in. Maybe we don't have you pay any loan payments at that point in time, but then you're paying the 12-month worth of payments over the course of eight months. So your monthly payments are bigger when you're paying them, but it allows you to kind of manage your cash flow because of the seasonality aspect of your business. So stuff like that is important, and things that you can get a little creative with when it comes to payment structure and stuff like that. So what is the secondary form of repayment? So secondary form of repayment is a backup plan. If the business starts to struggle, where are some other ways that payments can come from? This would include collateral, obviously. If very rarely are lenders out there doing unsecured loans nowadays. So finding a piece of equipment, a sale of collateral being equipment, real estate, that kind of stuff. Those are your typical secondary forms of repayment, let's say. So all lenders are going to want to look to see something like there to mitigate risk. If the business fails or the business cannot support the debt, what does the bank have as fallback to recoup our loan proceeds? So personal assets are another thing that can be pledged, and then something I'll get into here momentarily is a personal guarantee is also something that would come into play as a secondary form of repayment. So I'll go over to the 3 C's of credit now. 3 is kind of a consolidated, quicker version of it. You may also know the 5 C's of credit. It kind of they all kind of mean the same things as the things that lenders are looking to when it comes to credit. So number 1 in business lending, the first C is cash flow. This is probably, I'd say, the single most important factor, as strong cash flow can overcome weaker areas, but weak cash flow can stop a deal right in its tracks. So cash flow is, can the business afford the loan? We'll focus on historical cash flows, focus on current with like year-to-date financials, that kind of stuff. And in a lot of cases too, we'll look at projected cash flow, whether you're a startup business or maybe there's this piece of equipment that we're financing for you is really going to increase revenue and allow you to afford to pay the loan back. We can look at projected income for established businesses if it makes sense for the transaction. So cash flow, like I said, is probably the most important C of the 3 C's of credit, as it can really, if the business can afford it, then it mitigates a lot of the risk, right? So number 2, collateral. So this reduces the risk to a lender by providing an asset to secure the loan. Oftentimes you'll see all business assets, which is filing a UCC lien, which covers all tangible and intangible business property, including equipment, inventory, accounts receivable, cash, rather than just one specific piece of equipment. So this would be basically all business assets. I like to say is anything except for real estate or titled vehicles and equipment. That everything else kind of fits under the all business assets bucket. And then another main source of the collateral, your typical ones you'd see are titled vehicles and real estate. Those are pieces of collateral that will continue to hold their value. So primarily real estate and newer titled vehicles are stronger pieces of collateral than in all business assets lien, let's say. So it's important to know what the assets are that your business owns and their estimated value, and being prepared to bring that to the table when you're meeting with a lender is very important. And the last C is character. And this is where the personal guarantee kind of comes in. So character reflects your trustworthiness trustworthiness and reliability of the owner. So personal credit, management experience, track record, that all kind of plays a role into the character personal guarantee aspect of it. So on all, something that's kind of a little taboo, I guess you could say, or something that I often get asked is I'm looking to establish business credit. Well, business credit is kind of a mess in the sense where at least the banks in our territory, there's no true business credit score like you would see a personal credit score, right? The best way to establish business credit is to establish a relationship with a bank, with a lender, as that's something that I can use to mitigate risk as well. A customer's had three business loans through Bangor Savings Bank in the past, and they've never missed a payment. That's how you build up that rapport, that business credit with the bank. Now, most lenders are going to require a personal guarantee for all business. How Bangor Savings Bank requires it is anyone that owns at least 20% of the business needs to be listed as a personal guarantor. Now, a personal guarantor is like a legal binding agreement that makes an individual personally responsible for repaying the debt if the business defaults. By signing a personal guarantee, you're telling the lender that if the company can't pay, then the bank can pursue personal assets such as home, car, personal bank accounts to recover the debt. Sounds a little scary, obviously, right? That's kind of the point of doing it in a business loan, but at the same time, it's another risk mitigant. And if you're not willing to put your name on the loan, why would you expect a bank to be willing to put their name on it? If I ever get pushback, that's a line I use from time to time. And you go 9 times out of 10, customers aren't going to push back on it because they have faith in themselves, to put it that way. So when it comes to putting a personal guarantee on a loan, it's oftentimes a non-negotiable, let's say, and we will be pulling your personal credit again just to see what credit history looks like, payment history looks like, but the debt does not show on your personal credit report. So if you were to go try to get a personal mortgage somewhere, this would not play into the account of your like personal debt to income, that kind of stuff. All right. So applying for financing. So a lot of some of the stuff here kind of overlaps between startups and existing businesses. So for all of our startup business requests, so a business that is less than 2 years old, we require a business plan that shows lenders that you've thought out this business. You have a plan that you're going to execute, and gives the lender an idea on how what your plan is and how you're going to execute it. So a strong business plan answers the questions that does this business make sense and is it sustainable? Something that is very important when it comes to doing a riskier type of loan with a new business. Financial history. So tells a story about how the business has performed over the last few years, that kind of thing. Typically at Bangor Savings Bank, we look for 2 to 3 years worth of taxes, along with year-to-date financials prepared by the business, depending on the time of year. Like right now, it's starting to get to the time of year where we're requiring year-to-date financials, but doing a loan within the first 1 to 2 months out of the year, those aren't really going to tell us too much information. So at that point, we're typically looking for previous tax returns. So that is something too, and personal and business financials are often going to be required, and the personal side just goes back to the personal guarantee side of things. Financial projections, kind of touched on this a little bit, but always required for all startup requests for Bangor Savings Bank. At least 1 year is required. Typically, if it's under 100,000, we'll only require 1 year. Anything over 100 requires 2 years. So it's oftentimes that we're requiring at least 2 years of financial projections for startup businesses. It's important to make sure they're realistic, that they're supported by factual data, and that they align with the loan request. Now, so part of those projections will ask for assumptions, is what it is called, which gives us a little context into how you came up with these numbers. Why are you going to make $100,000 in the first month of your business? Tell us how you came up with that number and why you're going to do it. overly aggressive projections can really hurt credibility, and so being conservative and thoughtful forecasting really helps build trust with you as the owner of the business, and that you're going to be able to execute on it. Personal financial statement, that's something, again, goes along with the personal guarantee. For many small businesses, especially closely held ones, lenders will like to evaluate owners' personal financial strength as well. It helps us understand the overall financial stability and ability to support the business if needed by the personal guarantor, the owners. So it's something where the one that we send out, I'd say 90% of the information comes on a credit report, but we really like to see what personal assets look like. So do you own your home? What's your mortgage payments like? What's your cash accounts look like? As that's a big thing that we like to see is post-closing liquidity, which means after you put in a down payment or anything like that down, that you still have enough cash in the bank for reserves, and if anything goes crazy, that you have enough to cover that. So the personal financial statement just gives us more info into the financial picture as a whole. Sources and uses. So I'm going to have another slide. The next slide kind of goes over the sources and uses more in depth, but sources and uses is explain where is the money coming from and how is it going to be spent as part of these loan proceeds. So this is a breakdown of what a sources and uses table looks like. So you can see here where the funds are coming from, meaning a down payment, gifted funds here, a seller note that meaning that the seller was holding part of the financing, and then in this case there was an SBA loan to make up the remaining part of the transaction. And it's like a T-chart where both sides need to equal. Your sources always need to equal your uses. So the like I just said, the sources and uses table explains where the money's coming from and how it's going to be spent. So the uses are exactly what the loan funds are going to be used for. Sources are loan proceeds, owner cash injections, other financing that is part of the transaction, and grants. Those are things that you'll most likely see on the sources side of things. So lenders are looking for clear alignment between the loan amount and the uses, so meaning that they equal out, and that there's also an owner investment into it along with borrows funds. So showing that you're investing your own money demonstrates commitment to the project, commitment to the business, and gives the bank and the lender confidence that the business is going to be successful, because you're putting your money where your mouth is a little bit on I'm willing to put X amount of dollars into it because I believe in myself, that kind of thing. So now up here, it's important to understand what is the project and the estimated cost. So lenders want a clear, well-defined project, not really a general idea. So a detailed cost breakdown shows planning, reduces uncertainty, that kind of stuff for lending, which lenders always like to see. So what can the business or owners put towards it? Oftentimes, you're going to require an equity injection, is what it's often termed to. Very, very seldomly are you seeing 100% financing nowadays, at least by banks. Manufacturing financing and dealership financing on vehicles, that kind of stuff, yeah, they'll still do the 100% financing, but most banks are going to be requiring some sort of equity injection into the deal. So now this may include cash from the business, cash from personal savings. Equity in real estate is something that we can do, but lenders at the end of the day like seeing the owner have a little bit of skin in the game and shared risk, not entirely placing the risk of the loan on the bank. Now, the more invested the owner is into the project, into the loan, the more confidence it gives the lender that the project's going to be successful. So our general rule of thumb here at Bangor Savings Bank is 20% down on real estate transactions, and 20% down on used collateral, 10% down on new collateral, meaning if you're buying a new truck, 10% down. If you're buying a used truck, 20% down. And how we do it here at Bangor Savings Bank is that is just of the purchase price. All taxes, fees, that kind of thing are paid out of, or required to be paid out of pocket as well, as that doesn't really go towards the value of the vehicle or the value of equipment, let's say. So are there any investors? Outside investors can often strengthen a project, but they can also make it a little bit more complex. So lenders will want to know who the investors are, how much they're contributing, whether the investment is equity or debt, meaning is this investor going to investing into it to receive some ownership stake in the game, or are they expecting to be repaid, and what is those repayments going to look like? So important things to consider when talking to investors or something like that is to consider what their ownership percentage is going to be. Are they going to have any decision-making authority? What's their exit expectations? Are they looking to be involved for a few years, or are they in it for the long haul? That kind of thing. So be prepared to explain how investors fit into the overall business structure and the long-term vision of the investor, if you're going to end up having an investor in it. So along with investors, we can look for grants or gifts that can be contributed towards owner equity injection. So grants can often reduce borrowing needs and improve cash flow, because it's a significant can be a significant chunk of the project cost. But clearly it's important to clearly distinguish the grants or gifted funds from the loans to avoid any confusion for the underwriting teams. So when I say gifts, like if you have a family member that's willing to gift you $50,000 to go towards the down payment, how we handle it here at Bangor Savings Bank is we just have them sign a gift letter stating that this is in fact a gift and that they're not expecting any sort of repayment. Now, if there is a repayment aspect, you can certainly do that, but we will just want to know what those terms would look like so we can calculate it into our debt calculations, that kind of stuff. So home equity loans, this is an interesting one. So equity lines of credit, equity loans can be used for equity as well. Typically here at Bangor Savings Bank, we are still going to want to see some additional equity in the form of cash injected into the loan as well. So it can strengthen requests, but owners should fully understand the potential risks that is involved with doing that, because if you're putting equity from your home into it, if the business goes belly up and cannot support the debt anymore, then technically you're putting your personal residence or personal real estate that much more at risk. So we typically, when we're doing equity loans, yes, it's obviously some skin in the game because you're willing to put your house on the line a little bit there. But we typically like to break it down where you'll put 10% of the equity injection will be from the home equity line and 10% will be in cash, something like that. That's typically how we like to handle it. All right, so we're getting kind of close to the end here, but just some tips that I think are important when it comes to just business lending as a whole is I think it's important to bank local. Again, kind of biased because I work for Bangor Savings Bank in Bangor, but we have a number of great local banks across the state. I think Maine is pretty special. Maine and New England is special in that instance way, because I think there's just a lot of good, very local banks. We don't have a lot of national, your Bank of Americas and those types of banks throughout our entire state. Now, obviously, there are some, but the primary banking world is dominated by local community type banks throughout our state. So we're very lucky in that sense. As local banks, we understand the local economy, the industries, the seasonal trends, that kind of stuff. We value local banks often value relationships as much as the numbers and take kind of the long-term view as the customer. We really like to take the chance, kind of jumping ahead to the build relationship points, but we really like to build a relationship with a customer. I mean, my title is a relationship manager for a reason. I want to understand your business, help you plan, help you be proactive, which I think is a little unique when it comes to comparing local and national banks. So I also think that we can being local banks can provide a little bit more hands-on guidance from all aspects. Now, obviously, national banks, yeah, you'll have local people involved, but the decision makers or the credit team that's making the decision, they may not have as much of a understanding of the local industry. So it's important, or it can help your business grow if you're working with people that on all levels are familiar with your company or your region, that kind of stuff. So by choosing a local bank, it means that you're working with the decision makers who know your community. You're not just an application. You're not just a number. So building relationships is another important piece. Kind of touched on it. Lending is not transactional. It's very much so relational. And again, like I said, my title is a relationship manager for a reason. I want to know your business. I want to help you plan for the future, and I want to be proactive with you instead of reactive. So talking to your banker before you need a financing need, starting the conversations early so we can help plan to, hey, I want to buy this piece of real estate here in 2 or 3 years. What should I start doing to get prepared? And I'd say start stashing cash away now, making sure you got enough for a down payment, but also making sure that you have enough for reserves. Let's start talking about things now so that we can be ready to go when the time comes. Again, kind of the whole first slide was about knowing your business. One of the biggest red flags when owners can't explain like how they make their money, or they don't understand their financials, or can't clearly state what their goals are. You should be able to explain your business model, your key revenue drivers, major expenses, your strengths, your risks, all that kind of stuff is stuff that you should be able to just list off off the cuff, that kind of thing. So if you can confidently explain your business to someone like myself, then it makes my job being able to confidently advocate you to our credit teams and that kind of thing that much easier, because I have that much faith in you that you're going to get this done because I can see how confident you are that you're going to be able to do it. Lastly, I think getting help where it is needed is crucial. No one expects entrepreneurs to know everything, right? Smart small business owners know when it's right to seek help from bookkeepers, CPAs, attorneys, business advisors, mentors, bankers. It's very important to ask for help. Don't be afraid to ask for help, as it can really, really benefit your business in the long haul. So it shows good self-awareness, a willingness to improve, commitment to doing things the right way. So surrounding yourself with professionals who strengthen your business, it is just going to really strengthen you as a business and as a borrower moving forward. So resources, I kind of touched on it. I tell all of my customers that it's important to have a banker, an accountant, and an attorney that you can leverage when making certain decisions and planning for the future, right? So every business needs a banker, needs a bank, place to put your money, borrow money when needed, plan for future needs. Here at Bangor Savings Bank, we try to have support options in all phases of your business. We're a little unique where we have your typical banking services with loans, deposit accounts, that kind of stuff, but we have a full in-house payroll team. We have a full in-house merchant card processing team, a wealth management team, an in-house credit card, a lot of stuff that is all under the roof. All people working on it sit right here in downtown Bangor or at one of our other offices across the state. So it's important to have a bank on your side that offers and has the services that you need. Having an accountant is obviously, or a CPA is very important as well, as CPAs can help navigate tax laws and that kind of stuff, financial health, strategic advisory, and then attorney, asset protection, risk management, business structure, that kind of stuff, legal expertise. So, and then the SBA, FAME, SCORE, CEI, Chambers of Commerce, those are all great resources as well. So be sure to leverage that when you can, and don't be afraid to ask for help when you need it. So that's all that I've really got prepared for us here today. So I have my email and my direct office line here at the top, a couple survey links and other links to SCORE and all that kind of stuff. So kind of open the floor and see if anyone has questions or anything like that.
Yeah, thank you, Sam. I really appreciate that.
And no pressure at all, but happy to answer any questions that people may have.
Yeah, if you have any questions, please feel free to, you can use the raise hand function, or if you'd like to type something in the chat, I can read it out. In the meantime, Sam, while folks are preparing their questions, would you mind letting me know what are your thoughts on the number one thing that most people could, like if they're coming into the office to talk to someone about a loan, what's the number one thing that most people need to work on before getting to that point? The biggest thing that someone might
Um,
want to try to work on.
yeah, I would say just having a plan. I mean, you don't uh, doing some research online and talking to uh, or using the resources that SCORE has, that the SBA has right online, that Fame has right online. There's so many resources out there to kind of help you create a plan prior to going in and talking to a bank. Now, obviously, I'm always happy to help with that plan as well. But I partner a lot with the main SBDC and the business advisors over there. And I'm always impressed by the people that start there before coming to a bank because it's like, oh, well, they did their research. They went and spoke with a business advisor, got a business plan, projections, all that before just coming to the bank and asking for money. It's always I always am very impressed, and it's always a good sign in my eyes when a customer does a little bit of legwork prior to then just coming in and saying, "Yeah, I need $500,000 to open my business. What do I need to do?" So doing a little work ahead of time, I think, always goes a long way in my eyes.
Perfect. Do we have any questions? Please feel free. You can unmute yourself or use the raise hand function. All right. It doesn't look like we have any questions that have come through today. Uh, I feel like you definitely cleared up a few questions that I personally had around the three C's of credit. So I really appreciate that and kind of
Yep.
going into detail. And thank you so much today, Sam. And for the folks who are on the call, if you'd like to see the recording, I will be sending that out afterwards, including Sam's email. So please feel free to reach out for any more in-depth questions that you might have. And I hope everyone has a good day today.
So, thank you.
Bye, everyone.